One data set for two different problems, so I'll do them together in the same video again. We have the following information. Jacket Company reports the following information for June. Sales revenue, variable cost of goods sold, fixed cost of goods sold, variable selling and administrative, fixed selling and administrative. Calculate the contribution margin and operating income for variable costing. And then the second one is to calculate the gross profit and operating income using absorption costing. So we're going to start out using variable costing to calculate the contribution margin and the operating income. And so we will take our net sales revenue. We're going to subtract out the variable costs. And in this case, they broke down variable costs as to variable cost of goods sold and variable selling and administrative. And so when we subtract out those variable costs, that's going to give us our contribution margin. Then we'll subtract out the fixed costs, which were broken down into fixed cost of goods sold, fixed selling and administrative, and that's going to give us operating income. And so now we can just kind of plug in this information. We have net sales revenue of $755,000. Our variable cost of goods sold was $240,000. Variable selling and administrative was $168,000. And so we'll add those together for a total of $408,000. Then our 755 minus that 408 gives us a contribution margin of $347,000. For our fixed cost, we have fixed cost of goods sold of $198,000, selling and administrative of $79,000, and we'll add those together for a total of $277,000. And so now we can say our contribution margin minus the total fixed costs gives us operating income of $70,000. So now we're going to do essentially the same thing but under absorption costing, where the setup is just slightly different because we're going to say net sales revenue minus our cost of goods sold, which in this case is made up of variable COGS and fixed COGS. That's going to give us our gross profit rather than in the previous, at this point, we had a contribution margin. Then we'll subtract out the selling and administrative costs, which are broken down into variable and fixed, and that's going to give us operating income. So we have our same $755,000 net sales revenue. Our variable cost of goods sold was $240,000. The fixed cost of goods sold is $198,000. We'll add those together for $438,000. So then our sales revenue minus our cost of goods sold gives us a gross profit of $317,000. Our variable selling administrative is $168,000. Fixed selling administrative is $79,000. Add those together for a total selling and administrative of $247,000. And so our operating income is still $70,000. And the main numbers that they're looking for here are the gross profit and the operating income. And same thing if we go back to the other problem, you'll notice operating income stays the same. It's really just how we're breaking down those numbers. So in this problem, we see a contribution margin of $347,000. And in the absorption costing, we see gross profit of $317,000.